In this video, traders, we're going to talk about what to expect and how to trade a quiet trading day. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Okay, so when do we expect a quiet day? Now, I'm filming this the day before Thanksgiving, and these are kind of easy times to know. Day before Christmas, maybe an Easter holiday, maybe a bank holiday, maybe Labor Day, something like that. So in the US, Thanksgiving tomorrow, people are unwinding already. You know, they might not be in the office this week. They're certainly not going to be making large trading decisions unless something extreme happens in the markets. No one's going to put any capital to work when there's a holiday. They just don't want to be ruining their holiday, understandably. But there's also other times, guys, when we can expect quiet days. And that might be if we've got data coming up, i.e. an interest rate announcement, if we've got non-farm payrolls. If that's coming up on the next day and that's important, then many people won't want to allocate risk capital or large amounts of it before that data is out. And if they are positioned for the announcement, they've done it over a period of time. So, you know, I'm looking today, like I say, it's the day before Thanksgiving. We've got USD JPY sitting in an inside day here, highs here, lows here. Inside day, by the way, guys, when the high is lower than the prior day's high and the low is higher than the prior day's low, so it's inside the prior day's range, just like we got here on USD JPY, meaning a lot of indecision. No breakouts, not much is happening. Pretty similar over here on crude oil, although we did break out of the high, we kind of sat in a bit of a range. And even though it was early in the morning, kind of sat there, not much is happening. And as the day goes on, the quieter and quieter it gets. We look on gold, an inside day on gold, couldn't really break out to the downside. DAX, early morning push, but if you look on the cash session, again, very quiet, kind of choppy day. So what is the point in this? How do we position, how do we trade this kind of environment? The first thing is to consider seriously, if you're a day trader, to consider taking the day off, to consider going, you know what, there's not a lot going on. I don't expect there to be any home run type trades. I'm probably not going to miss out, and I might end up getting caught out on taking trades I don't really want to take and all this kind of stuff. So there's something to be said for just not getting involved in the markets at all. And that could be walking away completely, or it could be, you know, closing down your broker platform and just doing some analysis on your own trades, your prior trades, the market conditions, setups, strategies, that kind of extracurricular type stuff. And something to be said for that. But if you are going to trade, some golden rules here for you guys that I kind of stick to and maybe will add some value to you too. So one thing you can do is you can be very careful about taking any type of breakout type trade, any type of range extension, any type of push through a prior high. Just cross those off your list. The chances of the market running on aggressively, you know, even we saw in crude oil, guys, crude oil did break out. West Texas did, that's a daily, it's a 15 here, did break out in the morning, but, you know, it's kind of stuck there. It's pulled back to it. It's not monstered and ripped off. Yen hasn't even come anywhere close to the prior highs and lows. Gold almost got to the low early this morning. You get the idea. The idea is, guys, that the momentum type strategies aren't that effective. So cross those off your list. No breakouts. No trading against the trend either. If there's a predominant trend in place, be very careful about trading against it. If you must trade these environments, then a mean reversion type strategy is probably the way to go. You know, so you start to kind of draw some of your trend lines in. You start to say, right, well, I've got a trend line here. I'm going to be very, very, very careful and cautious. Very strict about what I'm going to take, very strict about when I'm going to get involved or not. You know, again, not taking breakouts, not getting sucked into kind of trend line breaks, but trading maybe a couple of confluence levels. So perhaps a double bottom type scenario with a trend line, you know, for a pushback to nothing exciting, maybe a moving average, maybe a prior high or low, you know, maybe just something. Look for the singles, don't look for any home runs. So example, there's your support there, pushes through, you're not chasing. Double bottom, got a little bit of a trend line there as well, and you're looking for a move back to support. That's your lot. You know, these type of little single double type trades, again, probably better to have a minimum or maximum amount that you take, because you can get caught up in chop. But it's the mean reversion type things, looking for extensions, looking for kind of continued moves that start to peter out, Don't get sucked into taking the breaks. As I say, look at them as an opportunity to kind of reverse. We have the same kind of thing on the DAX, really. The DAX, similar type of trade almost to the yen. Yes, we did break out from the prior high, but it's the same kind of thing. Breakouts aren't really going very far. If you look at this break from early morning, pulled back to it. Yes, it went a little bit, and if you're right on the ball, sure. But the better trade is waiting for the reversal. The better trade is waiting for this kind of double bottom type scenario and pull back to the break. That's a far better use of your capital and not getting caught out than anything else. We'll have a little look at this crude oil, guys. Same type of environment, same type of thing. Double bottoms, double tops, range extensions, bracketing your trade, bracketing your range, and going, right, you know what? I'm not going to get involved unless, that was a trend line, but you get the idea. I'm not going to get involved unless we hit that, we break that. Then I might look for a mean reversion back to some mean, moving average, prior break point, something like that. So golden rules are, guys, if you want to take a day off, fine. Don't get caught out trying to buy breakouts or sucked into kind of brief, quick movements. Mean reversion is the name of the day, is the game of the day. Trading that, not looking for home runs. There's not a time to either to, in my opinion, these are my opinions, guys, of course. I welcome your opinions in the comment section below. It's not a time to look for home runs or look to run winners either. If you're trying to do that, don't try and do it during these type of trade days. Quiet days tend to be shallower ranges, tend to be low volume, low volatility. Opportunity if you are careful about what you're picking, but be very mindful not to get caught out. Take care, guys, out there.